All right, welcome back. We got a distinguished panel. We're talking stocks. Peter Schiff, I'm sorry, I wanted to get you in on this top-down view, although that was a good debate about Apple. I enjoy a good debate, and I thank Ben Stein for bailing me out on Microsoft and my skepticism there. But Peter Schiff, today was a big day for stocks, number one. And number two, the leaders were the commodity-type stocks, the cyclical stocks, one could say the inflation stocks. Will it continue?
I don't even think it was a big day for the market in general. I mean, the Dow lost value today priced in gold. Maybe it held its own priced in oil. But, you know, I think you said it right at the first part of the program, that inflation is a monetary phenomenon. And, you know, money supply and credit has been going through the roof for the past decade. You know, for a while it went into the stock market, and then that bubble burst, and it went over into the real estate market. And now that bubble has burst, and the inflation is going into commodity prices, it's going into consumer prices. So that's where you got to be invested. If you're going to be in the U.S. stock market at all, it should be in commodity-related stocks, precious metals. So,
Pete, you want the inflation play. That's basically your strategy.
Well, that's what we've got. I might as well play the hand I'm being dealt.
Right. And how long do you reckon that can last before it really does the inflation you're foreseeing in your hypothesis, before that does some serious damage to the economy?
Well, it's already done. Look, the damage has already been done. The U.S. economy is already deindustrialized, basically. We're on life support from foreign central banks. I mean, if we were a stock, we'd already be broke. And I think it's only a question of time before foreign central banks pull the plug. And I think the dollar has a long way to fall. And when that happens, of course, you know, when the bond market realizes how much they've gotten it wrong on inflation, you're going to see a big drop in bond prices.
Right.
Interest rates are going up. The stock market's going down.
All right. Pretty gloomy. I appreciate it. Dr. Bob, welcome back. I want you to respond to Peter, please. And he says we're going broke, but the numbers we got today show that corporate profits after tax are at a record astronomical high. What's your take, Dr. Bob?
A record high, and that's backward looking at that strong GDP, and even more important than that, Larry, when we get into second quarter earnings year over year, watch what's going to happen. We're going to see double-digit profit growth again. I think it's going to be 12 to 15%. This has already set the stage. What we had to do is get beyond the Fed. We're beyond the Fed. Now we can watch what's important. That's earnings. Earnings are there. Companies are lean. They're mean. They're profitable. This market's going to all-time highs. You're missing a great opportunity if you're not in this U.S. market.
Look, this rosy scenario that you paint is not going to occur. I mean, if you want to look at why
it's not rosy. It's all based on profits.
No, it's not.
The only reason the market sold off was all about the concern with the Fed. We put that concern behind us with the Fed.
The market's been selling off.
Corporations have more money today on their balance sheet than ever before. The profitability is there. When you look at the commodity prices, it's rear view mirror. It's there.
It's not there. The market's been dropping for 6 years.
Profitability is at an all-time high.
No, it's not. Look, the Dow has lost half its value priced in gold since 2000. These profits are being earned.
Mr. Schiff, with all due respect, there were many, many years when the market was incredibly high relative to gold.
Sure, it was a bull market.
There have been many, many years when the gold had collapsed and the market was rallying like crazy.
Of course.
Markets are denominated in dollars, not in gold.
That was a bull market.
Amen.
Ben, that was during the bull market. This is a bear market. Things have changed.
This is not a bear market. This market has rallied phenomenally.
No, it hasn't.
All-time highs. It's nothing like a bear market.
Hang on a
sure, it is a bear market.
I want Ben Stein to referee this. We've got two polar opposite positions. All very interesting. Ben, what's your view?
It's a very simple position. Mr. Schiff says there's going to be a huge rally in commodities. I don't doubt that that's true. But denominated in dollars, which is how stock markets are measured, the market is in a bull market. But Mr. Schiff raises a good point. The long-term liabilities of this country, especially in terms of Medicare and debts to foreign central banks, are absolutely enormous. Once people realize how enormous they are, it's going to be a shaky, scary
Ben,
day.
you might want to measure your wealth in dollars, but I don't want to do that. I'm not going to measure my wealth in a currency that's being debased. I have no idea what the dollar is going to buy in a few years, so what good is it?
You have no idea. You have no idea what the price of gold is going to be.
I have a better idea than the value of the dollar.
You will soon be making bigger.
Look, they're not.
Warren Buffett.
It's very difficult to produce an ounce of gold. It's not very difficult to print money, and they're doing it like crazy.
Then why did the price of gold fall by 2/3 from the late 70s into the early 2000s? I mean, that's a price.
Because the price
about gold. It's usually a story
gold went from $35 an ounce to $850.
Hold on, hang on, fellas. We're going to come back. This is a very interesting. It's a very interesting debate.
Follow the profits.
Follow
the profits.
All right, I appreciate the profits.
Follow where the profits are coming from. They're coming from over-leveraged consumers.
go
consumers.
to the break so we can go to the final segment. We're still talking stocks. As the viewers can see, we have a lot more to do. Somebody's got to tell us what to buy and sell before this is over. And that means also the Mexican presidential election, which is where all those immigrants are coming in. Kudlow and Company, we're still here in Englewood Cliffs, New Jersey, not Mexico, at least not yet. Please stay with us. I want to get our panel to each give us one thought on investing. Bob Froelich, favorite spot right now?
Favorite spot right now is financial services. I think the Fed's done at 5 1/4. That's going to lead the market.
Peter Schiff, your favorite spot?
You know, I'm staying away from Mexico. You know, I used to call the U.S. dollar the U.S. peso, and I don't do it anymore because it's kind of an insult to the peso. But I still like Asia. I like the natural resource economies. You know, I like Hong Kong, Singapore, Australia, New Zealand, Canada.
All right. Thank you. Ben Stein, your favorite investment spot?
I like the DFSCX, which is the Dimensional Fund Small Cap Index. They're incredible at finding value in small cap. I love it.
Great stuff. Noah Blackstein, your favorite spot?
I think the notion that you could own China and the U.S. are the same economy. So I like the good old U.S. of A., the most underloved market over the past 3 years. I think it's coming due. I think the rhetoric from the cult of the bears is crescendoing, and it's over.
I love that, the cult of the bears. I
It's
missed
begun.
that, Noah. Herb Greenberg, you want to weigh in?
I just want to say, don't mistake this market's move today for quarter-end window dressing and markup.
All right.
Has nothing happened at the Fed today, Herb?
All right. Thank you, everybody.
No,
I
nothing.
appreciate it. You guys are great. Herb Greenberg, Noah Blackstein, Bob Froelich, Peter Schiff, Ben Stein, Mary Anastasio Greta. Mary, we're going to talk some more. Maybe we'll go radio on this Mexican thing. Anyway, coming up next, the results of today's poll and my last word. Kudlow and Company coming straight back.